All right. All right. Hola, guys. ¿Qué paso? How's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's skip all the introduction formalities and get right into this video because I'm sure you want to hear about Bitcoin, right? All right. So, continuation from yesterday's video. We're going to look at Bitcoin. Big surprise, right? You guys have been following my videos. You should have known that this was a bull trap. Come on, guys. This was a major rejection off the macrotrend resistance here, which also happens to be the perfect text. I mean, it's the 0.382 fib, which is like textbook B wave retracement ratios. So you go to the Fibonacci. I know it's going up, but it's still, you use the retracement tool to measure it. You go to the bottom of the A wave and you measure it. You click on it, and then you go click on the bottom of that swing, and then you go up to the top of the A wave, and boom shakalaka. See? 382 right here. 382. Right where we were rejected off the macro trend resistance. You know, I was asked what would I need to see in order to change my bias from bearish to bullish, and I said, well, we would need to prevail through the macro trend resistance here and flip it to support, and then come back up into this structure. Now I have this on the 1 hour. This is the same chart. Over here is the macro, and over here is the micro. I got the 1 hour, and then over here I have the 8 hour. So the 8 hour is just a general overview of the structure that we're looking at with the Elliott wave, macro, and the Wyckoff merged. And then I have the ending diagonal up here. This dotted line goes through the channel, designates the ending diagonal. But this whole thing basically is the channel, the macro trend support line and macro trend resistance line. But once we broke through it and we fell through the ice, so to speak, it became the macro trend resistance. And so we see that we had, this is a third rejection off that resistance line, which I contend constitutes the end of the macro B wave. And we've come back down, as it were, into this trading range. The trading range that started at the ending of the A wave. We'll call this a selling climax. Then we bounce around in here, and this last structure that we broke out of was a rising wedge on the micro. And as rising wedges are ultimately bearish. We had the rejection in the fall through, the fall back down into the range. Now remember, I said if we fall back down into the range, we're going to be magnetized. The price action is going to be magnetized back to the anchored VWAP, which is anchored off of the preliminary supply at the beginning of this distribution range, as it were. So it's measuring all of this. So this goes all the way back on the micro to this point on the macro, to back in early November of last year. And so I knew that if we got rejected off the macro trend resistance, that the price would fall back down and be, as it were, magnetized. It always draws back, it seems. You always see the price drawing back to this anchored VWAP line. And especially if it gets rejected off a major trend line juncture, it comes back down to it. So now we are back in that area. Here, I don't want to get this chart marked up too much. So we are back there now, and you see where I put this white circle is where we are now contending for this. I suppose that we're going to not make it. And we're going back down to the trading range support line of this A, the zone here for the A, which is 92,000 thereabouts. I don't think we'll hold there. I mean, I could be wrong. I'm open for both options, but there's basically two things that are going to happen at this point. We've seen the consummation of the A wave and then the B wave of this macro ABC correction, and now the C wave. If this is the beginning of the C wave, we can come back down to mitigate the A, and then that would be a double mitigation. We have the first mitigation and then the double mitigation. Usually what happens at these junctures is the price falls through. So this would be here on the macro, this area here. If we fall through this area, we could be going down to retest the lows beneath the preliminary supply area. This would be here underneath the 4 wave. This area, remember, this is a whole other liquidity. This is a macro liquidity void here. Remember we talked about this yesterday. The preliminary supply is the area after like a pump, a mega pump. It's where the supply starts coming in, as it were, putting the brakes on demand, and basically signaling that the party's over, and from here it's going to be a bumpy ride. We're just not going parabolic anymore. So now we start trending, we start consolidating, we start bouncing around, we start distributing and accumulating, with the end game, the overarching end game being distribution. So that's in a nutshell what it is. And in effect, the C wave, if this is the C wave, I'm not saying that the C wave is going to do this, but so far it's kind of been doing what we've thought it would be doing. So that, this would be the A, and then the B like we have here, and the C. If the C goes through trading range support, as it were, or this zone down here, the support zone of this lateral trading range, 92,000, then I think we're going down to the next liquidity void, which would be 85, 86 grand. Yeah, and that's entirely feasible. So I'm keeping my eyes open for that. And incidentally, if we do fall that low, for sure we're going to see altcoin dominance at that point, because Bitcoin is going to be at such a loss of dominance. If we fall through the anchored VWAP, if we fall back through the ice, so to speak, and we start making our way back down to the 92,000 area, we're going to see altcoin dominance grow considerably just from that momentum. And if we happen to break this juncture here, like we talked about, this range support, then we're going to see, that's when we see the altcoin dominance just kind of go through the roof, like we see here historically. All these areas where it just shoots up, these spikes that shoot up past the 75 line, that's areas where Bitcoin has just been down and bottoming out in the dregs. We see, like, after Bitcoin bottoms out, we have this, it spikes up in the opposite direction. It goes back and forth. In fact, in effect, creating double bottoms on this altcoin index season, altcoin index chart. So we see that here, and indeed, if we take it to the Bitcoin dominance chart, let's now look at Bitcoin dominance. We kind of did this yesterday, but I want to elaborate a little bit on it today before we conclude this video. Yeah, so same thing, macro, micro, macro on the right, macro on the left, micro on the right. So I drew out, why does it do that? So annoying. I drew out a regression trend here on the 30-minute micro, and as you can see where we currently sit, this is after, you see Bitcoin really hasn't dropped in dominance, even though we've had that big sell-off from the macro trend resistance on the price action chart. But we are still beneath the anchored VWAP, and I anchored the VWAP on the dominance chart to the peak dominance point up here from December 20th. This is when everything started dumping. Remember, the Federal Reserve issued the statement on the interest rates being lowered a quarter instead of a half, and so that spooked investors. This was that area here, and then from there it's just been a downtrend from that point. And you see here now in the regression trend where we currently sit today, we are in an this would be an overbought area. If you could kind of use this as a relative strength index in a way, like an RSI indicator, where we are in a severely overbought position according to this regression trend, and from here it's surmised that we'll be going down. Certainly the price trajectories on the price charts have been showing downtrend, like we just looked at. So Bitcoin should be falling, dominance wise. And so we see this here on the micro. Now, if it falls underneath this yellow line, now this is on the 30-minute. Let's take it out. I want to show you guys something. Let's take it like to the 2-hour. Okay, so this area here, this rectangle that's shaded in yellow, this was where the prior alt season was, that little window that we had, the week-long window in the beginning of December of last year. And when the altcoins were really flying, and then it ended here. But this was the depths where it all kicked in. This yellow line on top is, if we were to fall in this regression trend and come back down to that area, as it were, the support line here, we would be right at the cusp, right at the threshold of re-entering into altcoin season. And it's entirely feasible, because even this dominance chart has structures that are readily identifiable as either bullish or bearish. And I contend that we are in the second half of a double bottom. Double bottoms can, here's kind of like a double bottom here. It's got that distinct W look. The middle of the W comes up and creates what's called like the neckline, and that fills these two liquidity voids. Same thing here. The second wall always comes up and refills the liquidity void, both on the top and on the bottom. You see the bottom liquidities are filled as well. So you have a top liquidity gap and a bottom liquidity gap on the lows. Both are filled in these structures. And so I want to show you something. The beauty of fractals, when you learn to see fractals in all time frames. So you can see here the double bottom. You can see the Adam and the Eve right here, this little W, right, in this area that was the previous alt season. Okay, in this fractal, here's another big one. Here's another fractal here. You see it? That's number 2. Okay. And there's a third. Can you see it? The third is the macro. This one. So this presupposes that this wall down, this is the wall, this being the neckline here. Let me kind of get rid of some of this so you can see it. This is important for you guys to understand, because if you could see this and understand how these fractals work, that what happens on the micro eventually manifests in the macro. We talked about this. See, here's the micro, and then here's a sub-micro, and then the macro we just drew out. So it's played out twice already, and now the third time. I mean, I think it's just inevitable, even because of, and then we have the bias confirmed in the price action that we are going down. We can expect Bitcoin to lose dominance as we go back and retest these lows that we talked about on the price action chart. And this coming back down, in effect consummating this C wave, should cause the dominance also to decrease, Bitcoin dominance, and bring this area, as it were, back into the channel, back into the descending channel. and beneath this this support line as Bitcoin's price action on the, remember this is a dominance chart here, comes back down to mitigate on the macro this selling climax, in effect creating three macro double bottoms on the dominance chart. Well, one's a macro, one's a sub macro, and then one's a micro. So you know what I mean, though. Three of them, 1, 2, and 3. And so everything should jibe with this. That's the beauty and the science of studying price action and volume metrics. So that's all I've got. So just if you haven't subscribed, if you get something out of this stuff, just like, subscribe. I don't make a big deal out of it. I don't edit these videos. I know I kind of ramble on and I do a lot of ums and I'm trying to think and I'm trying to make this as easy as and as understandable as possible for some of you guys, especially the new traders. So you learn how to trade the right way. You learn how to read a chart the right way, and you don't need a plethora of freaking indicators everywhere. You could just go off volume, price action, a little bit. You could use like a VWAP to average out, the volume and price. But you don't need a whole bunch of fancy schmancy stuff everywhere. And so that's what I endeavor with this channel, is to teach new traders how to read charts, volume, price action. And if you get anything out of it, like, subscribe, and that'll boost it up on the algorithm so other traders can see it. And if you really want to get serious about crypto and about making money in crypto, then I recommend you check out our private Discord group. I try to keep you guys safe with these videos on YouTube, but when you join the Discord, you kind of have direct access to me, as it were, and you could, it's a live chat. You could text anytime through the chat, and as soon as I have time, I try to answer each and every inquiry, and so it's like having my own, just like, direct access to me. If you have a question or you're confused about what's going on in the markets or what's going on in a certain coin, I'll look up the coin for you and give you my 2 cents. So anyway, there are definitely benefits of it. And then when altcoin season does hit, I put all my charts up with my preliminary entrances and exits, and according to the Fibonacci ratios, and I have a very good success rate. The alt season is extremely lucrative for me, so that's how I'm able to continue doing this year after year after year after year. So, all right, guys, that's it. Thank you. Not financial advice. Nothing I say is financial advice except this. Please be careful in the markets. Take profit. If you're in the green, take profit. I think that's good advice, right? Take profit. Let's see what else. Oh yeah. Don't invest money that you need to pay the rent or your mortgage or to keep your wife happy or feed your children. You should know that. That's a no-brainer, right? Diversify. Don't just go into one coin. Split up your principal into various coins that you've done research in, and don't put all your money in one basket. Yeah, and so, all right, that's all I've got, and you'll be safe. All right, guys, adios. Talk to you soon. Bye-bye.